everyone. Good afternoon. Michelle here with our Friday live stream from ASIS Massage Education. Glad you could join us here today. Excited, always excited. First of all, excited to be back to my regular station here. Last week we were just joining you up from our Flagstaff campus. I'm back here down in Mesa, and today I'm looking forward here to welcome our guest today, Mark Weech from Weech Financial. Who is a CPA and is going to be talking to us about some of those most commonly asked questions surrounding taxes and the massage therapy industry. I know there's always lots of questions going on and misinformation and questionable information out there. So I'd like to get his opinion on a lot of this stuff that makes us kind of scratch our heads. And for me, I know especially going and paying someone to do it all for me because I don't want to mess it up. So without further ado, let's welcome Mark into our stream and say hello. Hi,
hello there.
Mark.
Thank you.
Thanks so much for joining us. So Mark, you are a CPA, correct? And that's
Correct.
A certified public accountant.
Uh-huh.
So one of the first things that I think often confuses people in trying to understand what we really need to do we need to hire a CPA? Are there other avenues that we can use, or is it really dependent on our situation or our finances, or what is some of your opinion on that?
That's a good question. You can file a return without a CPA. You know, that's obviously an option, but the concern is whether you've taken all the deductions that you're allowed when doing that, and whether you've overlooked something that you could have deducted. It could cost you some money. So I always recommend that you use a CPA unless you have a very simple return that doesn't have much going on with it. A lot of times I pick up clients a year after they've done their return they've been doing their returns, and then things got complicated. They try to do it themselves, and they got questioned on a few things by the IRS. So they end up becoming my clients, and we fix that problem, and I prepare the returns in the future. So
yeah, they know to stick with you for the rest of the time now too. They've learned their lesson, right?
Yeah.
So would you consider massage therapists probably being a little less than a simple return, or a little more than a simple return?
A little more, yeah.
Yeah.
But it's going to either involve a Schedule C, or it's going to involve a separate filing altogether for the business activity. So that's what makes it complex.
Right.
So a lot of people are not comfortable filing their own Schedule C, and so that's why I pick up these types of clients most often. Yeah.
Right. Yeah. So I know the Schedule C, that's if we consider ourselves is that if we're a independent contractor, owner on business, or is that also for massage therapists who maybe are only employed by an actual employer who takes out their taxes for them? Is that separate?
It would be more important for those that are considered self-employed to consult with a CPA. But many of my clients are CPA, or not CPA, they receive a regular W-2 from their work, and they still have us do it just to make sure everything's right. They might have other activities going on that involve a Schedule C. So.
Okay. All right. And do you see, I wonder if this happens in other industries too, but I know in the massage field, we have a lot of places that misclassify employees and call them independent contractors when really they're acting as employees. And does that cause issues for therapists who are trying to file taxes and go about things the correct way, and then later find out they weren't really classified the right way?
Right. Over the years, we've had a few clients where it was questioned whether they were truly an employee and they should have been treated as a sole proprietor instead. This is the cases usually where they are working from a different location from home, or from a different location than who they're working for. That would tend to lend itself to being a Schedule C filer. But when you work at the office or at someone's office, that more generally is an employee. There's a long list of categorization between the two, and so to be treated as an independent contractor is less desired by the individual, because from a tax perspective, you pay a little more tax that way. But you want to do it right, and you don't want to get questioned by the IRS. Is always my theory. So if someone has a question about that, they can always inquire of me, and we can discuss it. So.
Yeah. Okay. So do people find out later they were misclassified and then have to either confront their employers or something and try to figure that out and have them backtrack with all the taxes they should have taken out? Does that ever happen?
over the years, we've had a few instances where someone was treated as an employee, but they shouldn't have been. They should have been a self-independent contractor and filed their own Schedule C or separate return for their activity. Now, the IRS, lately the IRS has been busy with other things, let's just say the last year. But under normal circumstances, that there's a room for the IRS to question whether someone should have been an employee or should have been an independent contractor, and we help people with that problem when it occurs. So. Okay.
Awesome. Yeah, I know doesn't make a lot of sense sometimes to people when, a lot of the ads I see for people hiring, it's a lot of independent contractor where they let you build your own schedule, but that's about the extent of them making you an independent contractor. Everything else is they're taking payments for you. They're, supplying things and things like that. So definitely something to keep our eyes open about, make sure that we're properly handling those finances correctly.
The only thing I would add on that is when you are considering independent contractor status, it's usually when you're making net income, not gross, but net income after expenses of over $10,000 in a given year. That would lend itself to filing a S-Corp election and filing a separate return for your business activity, because at that point is when the tax liability would become greater, being a self-employed, continuing to file Schedule C as opposed to filing an S-Corporation. There's certain costs to filing an S-Corporation, but once you get over $10,000 of net income, that becomes feasible. So.
Okay, so that kind of brings me to one of my other questions I've always wondered. Is it important that all massage therapists who are working for themselves get an LLC as opposed to work as just sole proprietor under their name, or is that really important for them as well?
We always recommend that they form an LLC for their business for the legal protection, because you'll get the legal protection at that point. Mm-hmm. The filing is actually different. The filing for tax purposes, that's a different choice. You can be an LLC and still file a Schedule C, sole proprietorship.
Okay.
But if you're going to go into the business and it's going to be substantial at all, then you should file an LLC formation. You should form an LLC for your business, and then we can decide whether you need to file a separate business return for the business activity or not.
Okay, and so for anybody considering branching out on their own, or when they're still in school trying to decide, would they go to I know this might not be your wheelhouse, your question, but is this something their CPA could help them with, is starting the LLC and getting that?
Correct. We're always addressing that issue with our clients. If they're self-employed, we make sure that they file an LLC for their self-employment, regardless of how much they earn, and then decide whether to file a separate business income tax return for the business activity or to report on Schedule C as part of the.
Awesome. Okay, great. So in any case, even if we're self-employed or an employee, does that change for us what we need to be doing all year long to kind of prepare for our tax season, if you will? And is that difference for the two categories? If they're going to be doing things like the one time, like most of Americans, and the April 15th deadline kind of thing, or does it change for us if we're self-employed and have to do things more like on a quarterly basis or things like that? And what should we be doing to prepare?
Right. The year-end annual tax filing is affected, obviously, one way or the other. We're just depending on which way we go. But throughout the year, if you do elect S-Corp status, you're required to pay yourself a wage throughout the year, and you report that quarterly on the quarterly payroll tax returns, which are due at the end of each quarter. And so if you make the choice to become an S-Corporation for your business, then you need to start paying yourself wages on a quarterly basis. It involves some extra payroll taxes and so forth. But the amount you save overall could be great by filing an S-Corporation. If you're a sole proprietor and you're making a boatload of money, you're paying too much in taxes. And so there are decisions to be made, but once you've decided to file as a separate S-Corporation, you'll have the tax savings, but you'll also have quarterly payroll tax returns, and you're reporting your wages throughout the year, as opposed to Schedule C, which is just it's all taxable on Schedule C on personal return. So
if we're reporting our wages quarterly, then we could potentially be in that boat of getting a tax return at the end if we overpaid. Does that sound correct, possibly?
If you overpay, yeah. Our goal is always to break even and get close to break even, either owing a little bit or getting back a little bit. We don't like large refunds, even though they're nice. That means that IRS kept your money tax-free for a certain period of time. So we're usually not in favor of big refunds, but we also don't want you to owe big money either, because that's a big trouble.
Right. Yeah. You want to be right on that level. And so I think some of us, and I've been in the boat before, we get that tax return, you're like, woohoo, money. And I'm like, wait, that was my money. I should have had it already. Yeah, I know exactly. It's like, wait a minute, that's not like government giving me money. That's my money. I want it back. So yeah, finding that fine dance and getting that balance in there. But I could imagine that after some years, probably you would know like how much you really need to put in towards your wages and
once you're in the business and you get a feel for the way the taxes came out, you can make adjustments for the next year to correct it to make it more balanced. That's correct.
Awesome. Yeah. So if somebody's doing that quarterly, is that something that a CPA would be working with them every quarter to kind of manage that and make the changes as we're going, or is that like a once a year kind of thing?
It's 4 times a year in that case, because you have to file quarterly payroll tax returns in April, July, so forth. It's every 3 months after that. But we work with our clients to help them make business decisions as far as the way their business is rolling, and we can help the client decide how much to report as wages for that quarter based on the activity and the net income from that year. So usually we start in April with first quarter. First quarter is over by then. We can determine first quarter, and it will be the same the other 3 months, the other 3 quarters, I should say, unless the situation in the business changes. And then we can adjust the withholding so that by the end of the year, we're at the point where we want to be break even. So
yeah. Okay, so I can I'm imagining that there probably has been quite a few conversations with your clients over the past year because of different fallout from not being able to work and such, and particularly in massage, we weren't able to work for a few months. So all the more reason to have someone to help us through that. Like, how does this work and what does this mean for me? And
we've had a lot of service industry clients that have struggled this year because they weren't able to do their business, do their work. And so the payroll that I was talking about on a quarterly basis might have gone down to zero for a little while if they were completely shut down. But then it's a matter of resurrecting it now that things are looking a little bit better, and we'll see if they get better. This year, everyone's hoping that the virus will go away or go down to a level that we can deal with.
Right, exactly. Yeah, seems like promising, and then so we just have to be ready. I feel like if nothing else, we're used to something else coming around the corner at this point, so nothing surprises us at this point.
Yeah, after this year, everything is normal.
Yes. Yeah. So in getting things prepared to be able to sit down with you and do the quarterly things, what should we be doing as far as keeping track of things? Do you recommend your clients get into like QuickBooks or a different kind of software, or get an Excel spreadsheet or notebook paper, or what works for them, whatever is best, or what are the best solutions?
We want to do what's best for them, but QuickBooks is what we offer most often as a solution to the problem, because that allows you to keep track of your books accurately after we have trained you on how to do it yourself, or if you have us do it, whatever. So that we have accurate books throughout the year, and most importantly at the end of the year for the tax filing and so forth. So most of them use QuickBooks. Most of my business clients use QuickBooks. They either handle it themselves on the personal end and just ask for advice when they need it, or they have us just handle it completely, or somewhere in between. So
because it's now, I haven't used QuickBooks in a while myself. I'm doing this job more and not my business, but it's now an electronic version, right? That you could just like ship things off to you, or you have the same access to the account. So it's pretty easy to even in real time be able to help your clients through that, right?
Yeah, most of our clients, when they use QuickBooks, they upload it to us. So we have their entire file for the year. We can quickly and easily look at it and see if everything looks right. And if it does, we're good to go, and we just move on with the tax return at that point.
Okay. And is that costly for people to make sure they have access to it?
So when you speak to have access to QuickBooks?
So if I wanted to start using QuickBooks to work with you as my CPA, what do I have to invest in it to download the software, or is that
the software is usually $200-300, and you can use it for up to 3 years without upgrading. So you don't have to upgrade every year. You don't have to, even though it's available. But you can wait 3 years and then upload the next version at that point, and then wait 3 more years and so forth and so on. So it's about $200 to $300 for the software once every 3 years.
Okay. And is it user friendly? I know you said you train your clients, but do you have to really sit down with them for a really long time? Sometimes the people are like, I'm not tech savvy.
Our initial consultation is 2 hours long, and that my bookkeeper meets with the client and shows them how it works and what they need to do each month to do the bookkeeping. And then it's a training process, and they get to tweak the program to fit the needs of whatever the case may be for that business. So there might be different accounts that need to be set up, liabilities, this, that, and the other. So we help them get set up with that and train them on how to do monthly bank reconciliations and so forth, which is necessary to keep books for a company. So
awesome.
we're always here to answer your questions, and my staff can help them get trained so that whoever the client is able to keep their own books. Yeah.
Oh, great. That's good. So self-empowerment, that's always a good thing, right? They have to be in charge.
The other option is available where we do the books for them, and we give them fees for that, a fee quote, so they can decide whether they want to. If they don't want to mess with it, they're like, you just do it and I'll take it. Yeah.
Which is it's helpful for some people. Like, I just know where to, like, what I'm good at, what someone else is good at. Let them
there's different outlooks for sure.
Yeah, exactly. So some of the things that we're going to be inputting in QuickBooks are obviously going to be our income, but then the expenses, that's where I feel like massage therapists and maybe many in the service industry kind of get confused as what are really our expenses that are directly related to the business. And I know that might be even like a whole 2-hour long conversation we probably have just on that, but are there any like major things that stick out to you that some people make mistakes on to think that they can add and they shouldn't, or some things they overlook that they should be adding and keeping track of?
Yeah, the question you raised about the miscellaneous, these expenses that are somewhat business but not entirely business are the question, right? Because there's certain expenses that are directly related to your business, and so you're definitely going to claim those. And then there's other expenses such as telephone, I'm trying to think of other examples of cell phone and internet access and that kind of thing. Those are all going to be, the IRS is particular on certain expenses, but on those particular expenses, phone and internet, they say that you can claim it as 100% business, even though you use it for personal too. So, but when we sit down with a new client, we look at their books, if they're keeping their books. If not, we help them keep their books, and then we determine other expenses that aren't there that they might be incurring that could be claimed as a business expense. We want to be careful in that area. We generally claim all the business deductions we can, but we go over that process with the client, determining what would be deductible for their type of business and what might not. Some people like to get very aggressive and write off this and that has nothing to do with the business. And you have to warn them that that's trouble. And if you try to claim that, we can't back you up on that. So
some things that come to mind for me that I've heard of before is like if you do some like of your marketing in your house, like people are like, well, I'm going to deduct some of my rent or my mortgage payment because I'm working in my house, or I went to lunch today and thought about my business or made notes about my business. Can I deduct that lunch expense? Like how detailed do we need? What boxes are we checking off to make sure that it's not that weird gray area that we can really accept it?
Well, on the lunch side of things, to address what you said. So the lunch side of things, if you're eating by yourself, it's never a business expense. But if you're eating with a client, then it can be a business expense. Keep in mind that it'll only be 50% deductible. Meals are only 50% deductible, and that's the way it's been for years, even when it's a business meal. But when you're buying for yourself, and you yourself just go to lunch, that's never deductible as a business expense. So what was the first thing? I forget that you mentioned another expense before that.
Like your mortgage or your rental payments, or like you use like your home office for
business use of home. So there's a business use of home deduction that's available for everything related to the house. So when we talk about the house, we have to define an area, a room that we use for business purposes. And we outline what the square footage of that room is compared to the square footage of the whole house. And that's the percentage of your expenses related to the home that you can deduct, is the room compared to the house. That's the ratio. But your mortgage interest, your property taxes, other expenses that you pay for the house to keep it upkeep would be going to that equation, and then it would come out at the percentage that room represents of the house.
Okay.
So
does that also count if I'm doing my own sheet laundry at home? I can use my water bill as part of that, or is that
yeah,
not?
utilities go into the equation as well. So utilities,
Okay.
including water, electric, and so forth, along with the mortgage interest and property tax, would all go into that equation. And a portion of that would be a direct business expense, either on Schedule
Okay.
C or a separate S corp return. And then whatever's left goes into itemized deductions, as it usually would on your personal.
Okay. Do you need to be a homeowner to do that, or can you be a renter as well?
You can be a renter and claim business use of home, not the deduction, but it's only going to be based on your rent, your rent expense and other out-of-pocket expenses for the property.
Okay.
It wouldn't be based on a mortgage. It would be based
Right.
on rent, right? So.
Okay. Awesome. What about us when we're trying to give? A lot of people try to hit us up for donations. And I've told my students and such when they get asked that, first of all, don't always try to do everything for free. That's a whole nother story. But but also I know a lot of organizations will say, oh, we'll give you a tax, our tax code or tax ID, so you can claim it on your expenses and at the end of the year. But are we allowed? And I think I know the answer to this, but I'd like to hear you elaborate a little bit. Can we donate our services and write that off at all?
So donated services are not write-offable. In other words, you can't deduct your service, the service that you provided and didn't get paid for. It's not a deduction. So in that case, unfortunately, you can't deduct it because it's a service. It's something that you provided yourself, and that's just doing free labor. There's times for that, but just know that there won't be a tax deduction for it.
Yeah, that's what I tell students, and people have asked me this before. I said, if it's something near and dear to your heart and you want to support this organization or whatever, then you're doing it for, maybe as a marketing, like little baby step in or something like that.
Yeah, I agree.
Yeah. But if they donate, let's say they sold products or something like that, that's different, right? Because then it's a tangible something that has a price.
If you gave away something that was tangible that you purchased, then the cost of that would be a donation. It would be a charitable contribution.
Yeah. It's interesting. Do you hear of people giving the bad advice about that? Because I still see in some of these massage groups people saying it's write-offable. My tax accountant says I can do this. And I don't know anyone I personally have spoken to in the CPA say that was true. So I'm like, who's telling this information and how is it still living on?
Right. A lot of bad information gets shared. Unfortunately, you need to ask someone that knows it. We know it. We've seen what happens when it gets questioned by the IRS. So we know what's deductible and what's not. So.
Right. Another thing that gets brought up a bit too in the massage field particularly is trades. And I know like all the texts or the business books I've looked at says when you're trading with people and bartering, that's supposed to be also included in what you're counting as your income / expenses. Well, not expenses, but how would that work for us, and what kind of records do we need to keep track for those?
Well, what should be happening in that case is that a 1099 should be issued for the value of what was donated, the labor that was donated, and so that's usually that's the result of that type of situation. If that is not issued by whoever provided the service, then it does get lost in the shuffle. But you can't just create an expense when there's no cash outlay, no outlay of assets, or there's no outlay, then there's no expense. And so hard to answer that question, but it's a barter exchange. Barter exchange is what that's called. And so a barter exchange 1099 should be issued in those cases when it's over the threshold of $600, I believe.
So what if it's not under? Do you really think anyone's doing that? Anything with a one-on-one trade? Let's be honest here.
Yeah. So a lot of times what doesn't get reported is not reported for tax purposes. Yeah. That's the case.
Yeah.
So.
Yeah. Speaking of not reported, those cash tips, I know sometimes get a little pocketed and not quite reported, but I know some pitfalls to that. One being, summoned by the IRS to question that, but also sometime when you need to report your income and actually you want to show a higher income, right? To know that you have that. What have you seen in working with your service industry people?
So when we talk about tips in a restaurant situation, it usually does get reported on the 1099 or W-2. It gets included on there because the employer is doing things right and is reporting the tips as they come in and is tagging them to the appropriate employee that gets them. So in other scenarios, not in a restaurant, you'll have tips that are being paid that could get pocketed without reporting them. Technically, they're supposed to report all tips, as you said, on their tax return along with their normal pay. It's extra income to them. So.
Yeah, I know of some therapists who've gotten had the flip side happen to them, and they needed to file for disability insurance and couldn't prove they had enough money, or wanted to qualify for a house and couldn't show that they made as much money as they really did
because they didn't put it on the tax return, right? They didn't include it. Yeah. So
right, and I know sometimes it's $5 here, $10 there, but adding that up. I've been made fun of all my life for doing all the rules correctly and making sure you do things right. So I'm like, you better do that. It's $5, but that adds up a lot. So I know I got to be careful with that for sure. What about it counting discounts or anything? Is that the same thing as giving away those free sessions for raffles and things like that? If you gave discounts, you couldn't be able to put that in there as either, right?
Well, if you offer discounts for your services that you're providing, is that what you're talking about?
Yeah.
That just reduces the sales price. That just reduces what you bring in the door. So it's already a deduction because you're reducing the revenue, right? It's not a deduction per se, but it's already reducing the revenue. So you're getting the same effect. I think that's what you're asking me. Are you asking us? Yeah.
Exactly. But someone can't say, oh, I can expense off this like $10 I gave because it would have been money I would have received. That's not.
You don't get an expense off another $10. You just never received the $10 on the revenue side.
Right. Yeah.
So it's the same
I know.
effect.
I've heard some crazy questions before. So you're like, what are these? Like, there are people out there like, I don't know what we're doing. So yeah, exactly. So I'm going through my questions here to make sure that we're so we talked about the quarterly and the time frame. What's really some items for expenses and write-offs. Were there any, I half mentioned this, but I don't think we got anything in particular for the answer, but anything that people forget to include, things that they can use for their expenses or things they need to track of, I don't know, maybe mileage, what are those, what are some other things that might come up?
Well, mileage, whenever someone works with us, they're going to get these deductions because we'll bring it to their attention and they'll bring it up and we'll write it off. But if they're filing on their own, mileage is one that they may forget. There's certain expenses that they may forget to deduct. Mileage is deducted at the standard rate, which I think is 57.5 cents or something like that a mile. So you want to keep track of your business mileage compared to your personal miles. Personal mileage is not deductible, but business mileage is. As far as other expenses that aren't claimed, that should be claimed, when we think of the business, we think of the main points of the business, the main deductions that we always are definitely tied to the business. It's the peripheral deductions that throw people off. And so as long as we can tie the expense to the business and that it brings benefit to the business, we can usually make it deductible on that item. But we can discuss, I discuss that with my clients on a regular basis. They'll have a question on certain expenses in their books that they don't have in their books because they didn't think it was business. And we'll say, well, let's think about that. Let's talk about it a little bit and decide whether that's a business expense or not. And sometimes we'll find extra expenses there that they have forgotten about and they wouldn't think about when they're going to do their books. So.
Right. Yeah, that's definitely great to hire a professional. Just like I'm not asking my neighbor to give me a massage either. I'm going to a professional. So yeah, for sure. Yeah. And so you brought up the business mileage, and so is that, from my understanding, correct me if I'm wrong, that's if I'm maybe doing house calls and going to multiple places. But if I had one place that I went to work every single day, that wouldn't be counting as that's just your normal commute, right? Not everyone can really claim that, or is that incorrect?
Now, are you self-employed or are you a wage earner? If you're self-employed, we can think about that trip back and forth to the office. But if you're going to an office of someone else to work, I don't think that you should be treating yourself as self-employed to start with.
Right,
so
right.
That's the question.
Yeah.
If you're working for someone else and you're working under their arena and you're doing things that they say all the time, that's more like an employee, not a self-employed person. So, but if you're going to clients' locations or business locations to buy things to do what you're doing, then that would be mileage for sure.
Okay. Do you know of any? I hear there are apps out there for this. Do you have any that your clients have told you about, you recommend to them for tracking mileage?
Yeah, I'm having a hard time thinking of the name right now, but there's plenty out there, but there's good ones. I can't think of the name right now. Now that you asked me,
I know. It just popped in my head. I would have probably given you more time to think about it too if I remember.
There's all kinds of apps you can get on your phone that will keep track of mileage, and then you can tell it that trip was business, this one's not, this is not, so forth and so on. So it keeps track of your business mileage. I strongly recommend those for mileage tracking.
Yeah. I would think they would help a lot of us to get organized for sure. And speaking of that, what happens when you have a client who's just not organized? This is like they're coming to you in tears, like, I don't know how to do this. What do I do? What are my baby steps? What do I need to do to get myself in the right mindset and do the steps that need to happen to make this happen? Because I don't want to make a crying session every quarter or once a year. I want this to be like, here's my stuff. How do you get a person like not prepared to that happy person to see you again?
Well, usually they're coming to me at tax time, right? They got to do their taxes, but they didn't keep their books, right? That's how it starts. And so we've got to figure out, number one, how to get books that we can use for the tax return for that year in place, whether that's through them or whether we just handle that year and get it up to date and get a QuickBooks file that they can start from at that point. That's usually what happens. And so we need books in place so we can do the tax return. And if it's been a year that they haven't done any books, then they usually hire us to do that part of the bookkeeping so that the bookkeeping is ready to go and we have a file that they can continue on. And we can train them how to do that from that point forward. But if they just have questions on the bookkeeping that they're keeping already, we can help them solve those problems and have books real quick. So.
Okay, so it sounds to me like it's definitely individualized, just like you're treating your clients anyway, because they all have different needs. But also, if they're coming from different backgrounds or different approaches to how they've worked with their own taxes up to this point, you might have to approach them differently with tips to how to maybe sit down once a week or email me. How many times about this or that. I can imagine there's lots of different strategies that you would have to do to make your job easier too, right? Let's get the information you need.
Our general program is to find out what we have to work with right now, when they come to us, and then from there decide how to get the results we need from the past that hasn't been done, and how they would like to move forward. If they don't want to do anything with books, if they don't want to invest with the books themselves, then we offer them our own services, our compilation services, where we compile their books for them on a monthly basis or quarterly basis, whatever the case may be. And then the tax site, we can offer those services and show what our fees would be for that, as well as for just bookkeeping on a regular basis. Full service versus less service. So
right, definitely worth the investment, I would think, for sure.
Yeah,
you could show them how to kind of budget that to make sure that they're going to get that.
Most all of our clients agree that our services are valuable once they've had them for a while.
Right.
To think about paying for them at first, they're like, oh, but once they have clean books, they're like, oh, this is awesome. I'm keep paying that.
Right.
So
yeah, exactly. I can only think like one of the main reasons I think too is that if there's changes to the tax codes and rules and regulations and such, I don't want to have to think about that. I'm leaving that in your hands because I'm imagining you're getting those updates very quickly. And do you take like classes that you have to be updated on those, or how do you keep on top of what the latest things are?
Yeah, we have continuing education that we can take and that to get us up to date on a certain specific topic or that kind of thing. But obviously we get the feedback from the IRS and from other agencies that see what's going on with Congress and with the U.S. government and what's going to be coming down the pike. And when something's passed, they share it with us within a day or two. We get an email from it, and we can get up to date on it, and we can take a seminar if we need to about it to get it even more up to date. But yeah, there's always things changing, and right now we have a new administration, and so there might be some changes with that as well.
Right.
Usually it doesn't happen, and historically it hasn't happened until the year after. So 2022 would be the first year that any changes they make would take effect. That's generally how it works. So it wouldn't affect the 2020 year.
Oh, awesome. Do you also like send out information to your clients? You have like a newsletter or something like that with those changes, or more like on a one-to-one basis, tell
We
them those
do a
things?
monthly newsletter where we try to hit a topic that's important to most people, and then
Mhm.
we can answer questions directly, related to each specific client. But we have a
Okay.
newsletter that we send out once a month to all of our clients, existing clients, so they get constant information from us, regardless of whether they're speaking to us or not. They're getting information about changes in the tax law and various aspects of the tax situation. So,
That's a good relief from a consumer point of view. I'm like, okay, they know what they're doing. I got my things in good hands. So that's awesome.
right.
Yeah. That's so great. So I know we were just talking about how your office is Weech, and did I pronounce that right correctly? Weech
Weech
Financial.
Financial. Weech
Lineage
Financial.
Financial. You're out in Mesa, right on Power Road between Warner and Elliott.
Mm-hmm.
So the East Valley, Phoenix, East Valley area.
Correct.
Do you also see clients from afar, or do you like electronically? Listen to me, virtual meetings and stuff like that as well?
Yeah. In fact, we do a lot more virtual meetings now with the COVID situation, even with local clients. A lot of people are not comfortable coming into the office during this time, but to answer your question, we have a ton of clients elsewhere in various states. Probably have clients in 30 states at this point.
Oh wow!
Some more than others, a lot in California, a lot in Nevada, and so forth. But we service clients wherever they live, and so we have to be familiar with the state tax laws where they live and how that would apply. That's the major change. Federal is the same regardless of where you're at.
Right.
And there are certain states that don't have an income tax. There's like 7 or 8 states that don't have an income tax. So some people move to those states on purpose so they don't have to pay state
Yeah.
income tax. Right?
Yeah.
But anyway, we're familiar with all the states. We could file in any state in the union. And we have a lot, just on that note, we have a lot of Canadian clients and clients who are half the time in Canada, half the time down here. They have properties here. And then when they sell the property here, they have a U.S. tax obligation. They're required to file in the U.S., that kind of thing. So we have a lot of those as well.
So it sounds like you're really educated and can pretty much help anybody in North America.
Yeah.
Kind of sounds like.
We've done
Why Mesa? So
we've done
don't have to worry
returns
about Mesa.
we've done returns for people who live in other countries other than Canada, but it's very few. We're not an international firm by any means, but we can deal with international tax implications. So
Awesome. That's great. So I'm gonna put your info up here because I know we had the numbers a little. I don't know. I couldn't get it out of the blue, but is that correct? The 558-0700.
Yep,
For
that's
your
the
number.
correct the email address. Looks good. Yeah.
Yeah. So we were talking. You do offer some initial consults for free for people who are wanting to kind of see how they could better use, services. Particularly yours has seemed very it comes equipped with a lot of great information, current information.
We offer a free initial consultation, either here in person or over the phone, whichever they prefer. And that's always free. And then after that, they can decide whether they need us to do business for them, do work for them.
That's awesome. And so they can go over all their need, what are they looking for, what their history has been, and what kind of levels of services that you offer with your team. Right. And I believe you said Andrew was the other person on your team that also helps you out.
Andrew's my other partner. Me and Andrew are the partners here, and we have a great staff that gets bigger during tax season, obviously. And then, So anyway, we have a lot of people here to service their needs.
Awesome. So I would say since it's February 19th right now, is very heavy. Tax season is getting harder and more busy. If anyone wants to reach out to Mark and Andrew at Weech Financial, I would definitely recommend getting on the phones very soon to get that consult in there and see about fitting in these services into our needs in here. So what a lifesaver. Yeah. Oh, go ahead. I'm sorry.
I was saying we would love to meet some new people through this, and we have quite a client base already, but we're always open to new clients. So,
well, I think I learned a ton today and cleared some things up that I know I hear constantly, and I can reference back to this when people are telling me bad information. And I was like, nope, my friend Mark here, he told me differently, so I have proof. It's recorded, so we have the evidence. So we're about like at 40 minutes. So I want to be respectful of your time and to know, like, obviously it's such a huge topic, and that's why we have professionals doing it. But to at least get some information out there to kind of get get direction for ourselves and know that if we're on the right track or not, and who's out there to help us with this complicated for us issue. That we have people like you out there to help us. So I really appreciate all the time you took out today, and I hope some people reach out to you and see if they get some help in straightening out all those receipts in their shoe boxes. So
yeah, we're definitely willing to help in any way we can. So.
Okay. Well, thank you so much. I'm gonna say bye to our friends here. I'll be back next Friday. We have a local massage therapist owner down in Tucson who's going to be our guest speaker. Stay tuned on our Facebook page to find out more information on that. But we'll end with Mark here, and everyone have a great weekend.
Thanks.
You.